To look again at this Vancouver home sales data. The figures down on sales 26% year over year in August. Now that's below the 10-year average. Detached property sales were nearly cut in half in the month. And prices of a place with a white picket fence up more than 35%. So for his take, we're off to Vancouver to speak with Central One Credit Union Chief Economist Brian Yu. Brian, good to have you with us again.
Good morning. Thanks for having me.
Even though we got the foreign ownership tax of 15% take effect August 2nd, can we really attribute the big plunge in sales and the spike in prices to it?
I think over the past, for the foreign buyer tax, there is definitely an impact. We were already seeing decelerating markets since about the spring after we peaked out there, and we were already downtrending. So I think that we have been adding a lot of disruption to the market as a result of the foreign buyer tax, and that's also rippling into the domestic buyer as well, and that's being seen in the August numbers.
It's been suggested to me, though, that it's going to take months to really get a genuine sense as to whether or not that foreign ownership tax is really having any impact on foreign ownership.
I think at this current time, we're looking at the initial impacts of some of the uncertainty that's being driven by the tax. We did see a drop-off by looks of it of the foreign buyers. We still don't know exactly how many there are in the market. We only know the best guess estimates from the provincial government. But overall, I think that with the declining trend in overall sales, adding into these policies, we are seeing this drop-off due to uncertainty, some confidence in the market as well. And I think that will continue for at least the next couple of months as some of the buyers stay on the sidelines.
But by and large, can we still call this a supply and demand story more than anything else?
Yeah, so even with the drop-off, we're still seeing sales to active listings ratios in the market around 30%, and that is considerably high. It's a relatively still seller's market, although we probably will be moving more towards balance. We're seeing that in the prices as well, despite average prices coming off quite significantly over the past couple of months. What we're seeing is that the benchmark pricing has continued to climb, albeit at a decelerated pace. One of the aspects here is that some of the high-end buying, maybe the luxury home market, detached market, has been whittled away out of the market a little bit, but we're still seeing quite a bit of demand in the townhome and the apartment side.
You say that while it is still a seller's market, that we should move towards balance. What kind of timeline are you anticipating?
I think that we are moving. We're still seeing some erosion in sales. It's probably going to move into September. On the listings front, we would likely see a little bit more of an increase in the potential inventories, and that's going to narrow, but it's not going to be a weak market. I think we're going to stay within a balanced market and moving back as a rebound in overall demand into 2017. We'll start to see a little bit of a rising sales trend, but overall 2017 sales should be below where we are this year by about 8 to 9%.
So while it is a seller's market right now, what about that whole issue of the buyer's strike, meaning a seller doesn't want to list their house because they know once they sell it, they're going to end up on the other side of the equation as a buyer, and you're still going to have to buy an inflated priced home?
I think that that issue has been around for a while. We have had very low active listings for some time now, record low levels, and part of that is the fact that individuals may not be able to buy where they want to buy or the type of product they want. Given the decelerating market conditions, what we could also see right now is that the listings front, new listings that actually fell during the last month from the month prior. That suggests that people are in no rush to really sell their homes, and if they don't get the price that they want, they may choose, in fact, to stay on the sidelines as a seller as well as the buyers.
I guess particularly in the detached home market, we see evidence of that with the sales volumes down more than 40%.
Yeah, detached market, number one, there was always an issue of affordability. They're quite expensive. We seem to be seeing some potential cuts in some of the luxury home listing prices right now, but again, that's really still not accessible to the majority buyer or the typical buyer in the market. But we are seeing a significant slowdown in that part of the market, more so than the apartment and townhome front, and that's really what's, I think, skewing much of the average pricing metrics that are being published right now.
Brian, we appreciate your perspective. Thank you so much for your insight.
Thank you.
Brian Yu is the senior economist at Central One Credit Union. He joined us from, of course, Vancouver.